Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Tuesday, November the 2nd, 2010, and like we do every night, it's time to look at the markets. Check it out. Okay, yesterday we went over the NASDAQ in the 11-month chart to show you both the rally prior to the flash crash as well as the current rally, which is on NASDAQ. If you want to get that analysis, look at yesterday's video. Not much change there other than we got another gap to concern ourselves with. And today we're going to be starting off looking at the S&P 500. You'll notice the S&P is not as overextended as the NASDAQ. So if you're looking at this from that perspective, you have to say, okay, tech is probably further overextended than or a lot of the other types of companies out there. But from a sector standpoint, be more cautious on tech. And what I want to do today is we talk about the S&P 500, show you a lot of the sell signals we have and the overextension, and show you why the psychology of the market has shifted, and then what you need to learn from that. Okay, this is very important. So again, pay close attention. All right, first off, let me clear this up. We have here is the S&P 500. Whenever you're looking at this index, you know it's an average of the overall individual companies that make up the S&P. And the S&P is going to show you a better picture of the overall market versus something like the Dow Jones Industrial Average, which is only like 30 companies. So it's important to pay attention to your S&P. First off, back here, we were running around from 10,044 was our point here. And we rallied up here on low volume after getting a lot of good sell volume on this move to the downside here. Has started getting gaps in the rally here, which were telling us there's a problem because you don't get low volume gaps like this unless your market's getting frothy, unless you're peaking. And when you start seeing those conditions, you should see low volume gaps. That's when you start to see them. Okay, so they're important and they definitely raise a red flag with us. And when you get multiples, not just one or two, but many of them, it raises several red flags with us. Okay, we get another one here. We had lots of them in this run up here. And we had sell signals like the inverted hammer, shooting star, whatever you want to call it, right there, right there. Okay, we've seen this before. And then you start getting your bearish divergences where your slow stocks, like we talked about yesterday, and the RSI were trending lower while price activity was still trending higher. And that was a warning that you're unsustainable. And that's what we were saying. But during this time, lots of people were telling us, man, you're missing the greatest rally in the world. Technicals don't matter anymore. Fundamentals don't matter anymore. The Fed's are going to save you. And then what happened? Yeah, didn't change. Okay, here we are again. Note the point, 10,044. This time we come from a low point of 10,039, about $5 lower than the previous one. Now, if in the previous one you were overextended and broke down, where are you now if you're at $5 lower than this point and going to make this exact same move? Okay, that doesn't make a lot of sense, does it? Well, you didn't make it here. Why would you make it now? It's not intelligent. Again, low volume rally to the upside. Note the volume levels. All right, here's this red line right here is your average daily volume. Okay, 60 days. You'll notice this dropped off considerably, now flatlining, and you're still seeing low volume. So it means your volume here is less than it was here. This was low volume when it happened here. This is even lower. Okay, it means the signals are even stronger. All right, again, more gaps in this case. We have 10. 1, 2, 3, 4. You can count them. They're all there. And larger gaps, okay? More trouble right there. Again, shooting star or inverted hammer situation here, here, all the same telltale signs. And again, we've got the bearish divergence, okay? So nothing's different on the chart. We're basically showing, and if anything is different, it's that it's worse now than it was back here. All right? One more thing that's the same is the same people back here that was saying you were missing something and you're going to get burned, they're back. They're telling you the exact same thing. Nothing's changed there. What has changed? Okay. In this case, we had the Europe financial crisis. All right. And we knew about this before it finally broke down and Greece came running for capital. We knew about that information here. We were all talking about it. We had high unemployment. We had the financial mortgage crisis, all that stuff was in play at this time, and down she goes. All right, now we're up here again, exact same problems. And if you follow us on Facebook, you've already got the articles that we post up there that show that that news is now not only the same as it was here, it's now worse because you've got the new data on these the pigs out of Europe. They were showing that the cuts that they've been making are actually not changing the problem, not solving the problem. Okay, they're going to need something else, and we've already seen that the billion-dollar backstop by the global banking community didn't actually solve the problem. So you can't just throw money at a credit problem. You've got to pay down debt. We have, been saying this again and again and again. So my point here is that though they're telling you the Fed has, changed it and technicals don't matter anymore and fundamentals don't matter anymore, don't believe it. Do not believe it. Whenever you get overbought conditions, overextended conditions, investors will do one of two things. And this is how you can tell a good investor from a bad. A good investor will say, wait a minute, something's not kosher. And they'll start getting really cautious. They may pull back on the amount of capital they got in the market. They may start taking short positions. They may tighten up their stops. Different strategies depending on the types of trader that they are or long-term investor perhaps. But at the end of the day, they're always going to take notice and say, wait a second, something's not quite right. Why are we overbought? What's driving this market higher? What's going to keep it going higher? These things, okay? If they cannot answer those questions, they have to say, wait a minute, from a fundamental standpoint, this is illogical. I'm not safe here. I'm going to back out. Then you've got the other side of investors and traders. These guys think that this time it's different. They always do. They say, hey, wait a minute, technicals don't work. If you just buy and hold, everything's great. Just keep buying, keep buying. Those guys buy into the top and ultimately get wiped out. So I want you to just look at the chart for yourself, analyze it, and ask yourself, what's the conditions here? When you look at the overall markets, they're very clearly peaking. Has no other way to sugarcoat that for you. The fundamentals are not good. We got a news article a couple days ago posted on a Facebook page and also on our free website at perfectstockalert.com showing they already expect another 8% of drop in housing, all right, price of housing. Now, we got another article we posted that already drew out the facts and stated that 30% of homeowners are already underwater. Another 20% are waiting to go underwater if the market falls another 10%. So you're looking at 50%, near 50% of homeowners underwater. Don't you expect that to increase foreclosure rate, put more pressure on the financial system? Yes. Why? Because this is an entire fundamental credit problem, all right? A credit crisis that's been spreading, it's not been dealt with. We haven't changed anything from today that was back here, all right? During this time, we had problems with our foreclosures. We still have that. During this time, we had problems with Greece. We still have that. During this time, we had problems with the U.S. deficit. We still have that. Now we have actually more. We know also about the takebacks and the putbacks, and you got all these people put more pressure on the banks saying we want our money back, and you've got the 50 states in the U.S. that are running out of cash. You have more problems with Greece, Spain, Portugal, Italy, so forth and so on. And the only difference, the only thing driving the market still higher is the Fed. The Fed has grabbed the market, taking it hostage, and driving it higher, but it won't actually change anything. It will not change the fundamental problems. It will not lower unemployment. It will not do any of the things that they are trying to, avoid talking about, which is the things that actually prop up price activity and motivate buyers to go into the market. So that's the important factor right there, okay? Basically, you're in a position where you're going to have to just wait it out and wait for reality to set back into the market. And I would look for that to happen in Europe. I'd look for that, like that news article I posted on Facebook today. If you follow us there, it shows the exact same thing I've been talking about. This problem's not going away. It's a wildfire that is spreading, and it will bring down anyone who ignores it. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. A quick look at our disclaimer. Wait, before I do that, I almost forgot. Last month, every month, since 6 months ago, we set out to make a free service. We wanted to give you a free website, free nightly market analysis, and all this stuff. Really cool. And we did that. And every month we tell you that it costs us thousands of dollars to provide this service to you guys for free. We don't mind doing that as long as we're growing, which simply means share our videos online, refer a friend. And as long as we do that, we slowly but surely come to a point where the ad revenue on our website will actually pay for it, and I don't have to keep paying for it. Well, last month we did, I believe it was 75% of the cost of running this service was paid for by ad revenue on our website. So thank you very much for that support. We appreciate that. We are very close to actually reaching our goal of making this site 100% free and paying for itself, because I'm tired of paying for it. But I thank you guys for your support on this. We can't do it without you. My analysis can be great, can be solid, can be understandable, but unless you guys support it, it goes nowhere. So I just want to say thank you very much for your support. God bless, and let's have a quick little look at our disclaimer. The disclaimer, read it and weep. Like to encourage everybody to join us at perfectstockalert.com, a free website. We got a really good, lively message forum full of bulls and bears giving good, logical reasons for their opinions, and we'd like to have you there, okay? God bless. Take care. I'll see you in the next video.